morning. It's another week of Business Morning on Channels Television. Welcome to the program. I'm Chimezie Obi. Well, we'll start off with the markets, and last week turned negative on the domestic bourse, although marginally, as Thursday's loss of 0.48% muted the accumulated gains of the three other sessions. As a result, the benchmark index closed lower by 0.06% to 41,107.81 points, while the month-to-date and year-to-date returns stood at 0.06% and 7.49% each. Our volume and value of trades dropped last week by 19.90% and 14.68% to close at 1.33 billion and 20.8 billion naira each. The consumer goods, oil and gas, and insurance indices closed lower by 1.89%, 1.42% in that order, while the banking and industrial indices advanced by 1.56% and 1.06% each. Now let's look at the money market. The overnight lending rate shed 9 basis points last week to 3.33% against the previous week's close of 3.42%. That is despite significant outflows from OMO sales, which was about 600 billion naira, FX sales of about $210 million US, and treasury bills auction of about 190.484 billion naira. System liquidity remained healthy throughout the week. Inflows include matured OMO bills of about 186.68 billion naira and matured treasury bills of about 95.42 billion naira. Our expected inflows of 226.68 billion naira from OMO bill maturities are expected to support liquidity this week, leading to further moderation in the overnight money market rate. And look at the fixed income markets there. The treasury bills market proceedings were mixed, though slightly bullish, as demand initially spurred by surplus liquidity early in the week was tapered by the CBN's large liquidity mop-up on Thursday. As a result, average yield shed 1 basis point to close at 11.29%. Yield at the short end contracted, benefiting from investors' interest in the 34-day to maturity bill. On the other hand, yields at the mid and long segments recorded expansions following sell-offs of 118-day to maturity and 216-day to maturity bills. Meanwhile, at last week's primary market auction, 9.54 billion naira, 47.71 billion naira and 38.17 billion naira of the 91-day, 182-day and 364-day bills were allotted. The bills were 4.22 times oversubscribed, with yields closing lower across the 91-day at 10%. Previously, it was 10.90%. The 182-day closed at 10.95%, previously at 12%, and 364-day bill was 11.15%, previously at 12.08%. At the bond segment of the fixed income market, trading in the bond market was predominantly bearish due to the 5 basis points rate hike in the long-dated bill at the OMO auction and profit taken following last month's rally. For the week, average yield rose 21 basis points to 112.88%. There was sell pressure at all short, mid, and long ends of the curve, with the June 2019, March 2027, and July 2034 bonds recording the largest expansions. Let's quickly look at the foreign exchange market. Now, the naira traded flat at 362 naira against the US dollar in every session of last week in the parallel market, while it weakened marginally by 0.07% to 360.75 kobo in the INE FX window amidst continued interventions by the CBN. Now, about $210 million was injected into the FX market by the Apex Bank, allocating $100 million to the wholesale window and $55 million apiece to the SMEs and invisible segments. Meanwhile, total turnover in the INE FX window continued to decline, dropping 17.73% to $782.08 million. Trades in FX forwards showed appreciation of the naira against the dollar in the 3-month, 6-month, and 1-year dated forwards, while the 1-month forward dropped 0.02%. And that's pretty much how the markets traded for last week.